This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global energy traders are emerging as early buyers of Venezuela's stocks of crude and fuel oil following last week's easing of U.S. energy sanctions, according to people familiar with the matter. U.S. sanctions that were in place on Venezuela since 2019 largely blocked state-run oil company PDVSA from exporting to its chosen markets. That changed last week, but Washington's 6-month relaxation of the measures is too limited to spur new crude production. It has offered a tantalizing opening for spot sales by PDVSA and the reactivation of some supply contracts that could boost revenue, the people said.
China will cap its crude oil refining capacity at 1 billion metric tons by 2025 to streamline its vast oil processing sector and cap carbon emissions, the country's state planning agency affirmed in an online posting on Wednesday. China, the world's top crude oil buyer, increased its oil refining capacity to 920 million tons per year, or 18.4 million barrels per day, BPD, in 2022, overtaking the United States as the world's largest oil processor. The National Development and Reform Commission, NDRC, said it would limit new refining capacity, promote the upgrading and optimization of refineries, and accelerate the closure of small and outdated plants, according to a posting on its website that was dated October 10th.
Moving on to the top news in the energy sector.
Oil was little changed on Wednesday after falling for 3 days as concerns about slowing European demand offset worries of Middle East supply disruptions stemming from the Israel-Hamas conflict in Gaza. Brent crude futures edged higher by 6 cents to $88.13 a barrel as of 0345 GMT, while U.S. West Texas Intermediate crude futures were up 1 cent to $83.75 a barrel. Eurozone business activity data took a surprise downturn this month, suggesting the bloc may slip into recession, creating a drag on the outlook for oil demand. Overall, the region's oil refineries have been consuming less crude than a year ago amid lackluster economic growth, Euro stock data has shown.
The International Energy Agency, IEA, sees the current level of oil storage in member states sufficient to take action if required to stabilize oil markets, and sees no need to increase strategic reserve requirements, an official said on Tuesday. The Paris-based agency said earlier in October that it stood ready to act if needed to keep markets well supplied as the Middle East conflict is fraught with uncertainty and poses risks to oil flows from the region. Oil prices soared to over $95 a barrel after Hamas launched a shock attack on Israeli civilians in early October, posting one of the most significant geopolitical risks to oil markets since Russia's invasion of Ukraine last year. Next, we have the top news in metal markets. Copper prices in Shanghai climbed to a 2-week peak on Wednesday, underpinned by better demand outlook following top consumer China's decision to roll out fresh stimulus measures to support the economy. The most traded December copper contract on the Shanghai Futures Exchange rose 1.1% to 66,900 yuan, $9,149.34 per metric ton by 0351 GMT, the highest since October 10. 3-month copper on the London Metal Exchange held its ground at $8,057 per ton, at a 2-week high.
China's gold consumption in the first 3 quarters of 2023 climbed 7.32% from a year earlier on increasing demand amid economic recovery, the China Gold Association said on Wednesday. Consumption of the precious metal in the world's largest consumer totaled 835.07 metric tons in the January to September period, with over 66%, or 552.04 tons, in gold jewelry, a rise of 5.72% year-on-year. The rising pace of consumption of gold jewelry slowed down in the third quarter as buyers preferred to take a watchful stance amid lingering high gold prices, according to the association.
We will now look at the top news in the agricultural sector.
A delegation of commodity importers from China on Monday signed agreements to buy billions of dollars worth of agricultural goods, mostly soybeans, during a ceremony in Iowa, the U.S. Soybean Export Council, USSEC, said on Tuesday. The agreements, signed at the China-U.S. Sustainable Agricultural Trade Forum, with the first such bulk signing since 2017 between top soybean importer Beijing and the US, the world's second-largest supplier of the oilseed. The deals also included corn, sorghum and wheat, the US Soybean Export Council said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.